Today, for Stock of the Day, I thought we'd look at a sector or a commodity on the day that the Queensland State Government said it will hike coal royalties. After a 10-year hiatus, the Queensland Government hiked coal royalties in their state budget, higher than expected, with 3 new progressive tiers added to the current royalty scheme, introducing a royalty rate of up to 40% at the higher end. At current spot prices, Queensland has the highest coal royalty rates in the world. Some of the companies potentially impacted by the decision, the BHPs, the Stanmore Coal, Bowen Coking Coal, New Hope. So after the commodity has run hot, the politicians are putting their grubby little fingers all over it. So, is it going to impact the share performance? Josh, what do you reckon?
Well, obviously anything coming out of their bottom line is going to impact them in the longer term. I think it's important to keep in mind the big thing in the markets right now is the Fed and interest rate story, and that's on the back of having to, unravel all the supportive measures that were from monetary policy during COVID. We're kind of seeing the same on the fiscal side. So obviously governments pumped out a lot of money, helping out businesses that needed it during that period, and now they're going to have to start to claw back some of that money. And personally, I think going for the coal aspect, and given it's such a high commodity price at the moment, having that tier structure does make sense. Obviously, the companies aren't going to like it. BHP has already come out and said that they're opposed to it. But I mean, at the end of the day, their profits will be able to handle any sort of hit to that. Probably the most impacted is going to be the smaller companies that do have a lot more exposure to the Queensland area, such as Deterra, also have Stanmore and Commodities Global. So those are the smaller plays that obviously don't have such as healthy profit margins, and also other commodities to protect their earnings as well. Right. They're going to be most impacted by those plays as well. But for the time being, coal stocks are up today.
I was going to say that, Carl. Whitehaven is just dipped into the red, not by much. It's down 1.5 cents in the last couple of minutes, but BHP's up, and a lot of the smaller coal stocks up as well. What do you think about the impact of the royalty and on coal stocks generally?
Yeah, well, more generally, I still like coal stocks. I mean, the price of coal itself hasn't changed, so it's still trading around about $388, $390 a tonne. And so we're still talking supersized profits. Of course, politicians like to get their fingers on some of those profits when they're around. And I guess maybe some of the problem is that if coal prices fell, then the royalties are still going to be there, right? And that's ultimately what the market needs to respond to. But I still think they're going to move more on this supersized coal price than anything else. I think, and I had a good look at that coal chart today. It just looks so solid. It just looks impervious to attack. And you have to wonder how a lot of these issues all over the world now are going to be resolved anytime soon. They're probably not. So on that basis, I think that sort of the medium-term view is still good, even though we've had this short-term hiccup. Looking at some of the charts, and we sort of mentioned Coronado, we mentioned Bowen Coking Coal, BCB. That's probably had the biggest price impact. But Terracom's got an operation out there, Koshi. That's one we talk about quite a bit. I'm trying to remember something on the Stanmore Resources. That's another one as well. So look, we're talking, and I'll just use Stanmore because it's the chart that's up. So 280, 290, down to as low as 150. So we're talking a halving in value, and now bouncing. That one's bounced from about 50 cents from 150, so about 30% recovery. So I think it's kind of, what the market is good at doing is discounting this stuff. So it's basically, well, we analyse it, we adjust the price, and then we get on with the business of everything else, which is what I talked about before. So I think it's okay. I'm looking at, say, Stanmore. I think it's a pretty good pullback. It's pulled back to its long-term uptrend zone, and today's bounce is welcome. So I can go a hold on a lot of these on the basis of their long-term trends, but the next thing for me will be to see how they respond after a bit of a rally. So if we get a bit of a rally, and they kind of hang up there and hold that rally really well, I still think we're sort of buy the dip accumulation, focus on the big picture. But if we get that rally and then we get a bunch of black candles, that's what viewers need to watch out for now, because that's telling me, okay, well, we're not buy the dip anymore, we're sell the rally. Right. And again, that's that key bear market mentality. So look, I think they're a hold for now, but everything's on notice in that sector.
Okay.